Welcome to Inside India. I'm Amit Singh, and these are your headlines. Oil prices are extending declines after comments by President Trump eased some concerns of a U.S. intervention in Iran. President Trump holds firm on his Greenland ambitions as U.S., Denmark and Greenland officials meet in Washington. The chairman of the Arctic Circle telling CNBC there's no immediate threat from China or Russia. Gold and silver taking a breather after a record run, partly driven by geopolitical uncertainties. Could we soon see silver hitting $100? One of our guests coming up is not ruling that out. An Indian IT giant, Infosys, surprises with an upgraded revenue forecast that sent its US-listed shares soaring. All right, well, let's get a start with what's happening with the Asian markets. We're watching this space very closely. There's a lot that's happened in Japan particularly. It's been rising for the last couple of days, but down right now almost 2%. The Kospi up 0.3%. The S&P ASX 200, that's the Australia market, also up 0.2%. The Hang Seng down, the Bursa down, and obviously Shanghai also down. There's a lot that's happened with silver in China. We're watching that space because China has restricted the physical silver going out of China, as has the U.S. taken action, and that's a bit of a tit-for-tat that's been playing out. We're also not that concerned about the Indian markets today because it's closed, and we'll bring you more updates on that in a bit. But let's also move on and give you a sense of what's happening geopolitically. U.S. President Trump renewing his vow to pursue the acquisition of Greenland. Despite that high-stakes meeting between U.S. officials and Danish and Greenlandic ministers in Washington, D.C. overnight, MS Now's Ines de la Cuetara is in Nuuk, Greenland, and filed this report.
We understand that meeting lasted for just about 50 minutes, but there were no apparent breakthroughs. We heard from the Danish and Greenlandic foreign ministers after the meeting. The Danish foreign minister saying that there were still some fundamental differences between the U.S. and Greenland and Denmark, saying that they were not able to convince the U.S. to change its position. And the Danish foreign minister going on to say that it's actually been quite emotional for Denmark to handle this kind of pressure from one of its closest allies, the U.S.
We didn't manage to change the American position. It's clear that the president has this wish of conquering over Greenland. We made it very, very clear that this is not in the interest of the kingdom. There's a government in Greenland with support from 3/4 of the Greenlandic population. The premier made it very, very clear yesterday that Greenland, for the time being and for foreseeable future, will remain within the kingdom of Denmark. And therefore, this is a common position that we want to work with our American friends and allies, but it must be a respectful cooperation and it must respect the red lines.
In the meantime, just moments before that meeting got underway in D.C., the Danish Defense Ministry announced that Denmark would be ramping up its military presence in and around Greenland. Arctic Command saying that they've already sent planes that landed here in Nuuk, and saying that they're going to be closely cooperating with NATO to ramp up exercises in the region. We're also learning that other countries are kind of sending in reinforcements. So Sweden's prime minister is saying that Swedish troops have already arrived in Greenland. France saying it is sending a naval vessel to the region. Norway and the UK saying they are considering how to boost security in and around Greenland as well. So clearly NATO allies here wanting to show their support for Denmark, for Greenland, wanting to show that they can also bolster security in the Arctic region, which we know has been a big concern for President Trump. He says that is why he wants Greenland, because he is concerned about Russian and Chinese threats in the region. I will say Greenlandic officials we've been talking to say they haven't seen any Russian and Chinese ships in Greenlandic waters, as the president has been saying. And in the meantime, we have been talking to Greenlanders in the last few days here. They are very worried. They are taking this seriously. They just want President Trump to leave them alone. They say they don't want to be Americans. They don't want to be Danes. They want to be Greenlanders.
CNBC's Dan Murphy spoke to the chairman of the Arctic Circle, formerly the president of Iceland, Olafur Grimsson, and he said it was difficult to understand what President Trump wants to do with Greenland.
At the present, there is not a direct, clear, obvious threat from Russia and China in the Arctic. That doesn't mean it couldn't be in the future, but at the present it's not. I mean, the only part of the Arctic where China is in a prominent way is the Russian part of the Arctic, where China is in terms of mining, energy resources, maybe some military exercises and so on. But beyond the Russian part of the Arctic, whether it's the Canadian Arctic, the US Arctic, or the Nordic Arctic, China is not a big player. And Russia, of course, is not there. But in terms of strategic importance or economic importance, it's difficult to understand what he actually wants, because the existing agreements between the Kingdom of Denmark and the US with respect to Greenland is that the US has enormous possibilities to enhance its military presence in Greenland under the present situation. In the past, it had dozens of military bases in Greenland. Now it's only one. It could have more if it wants to. The government of Greenland, the self-government of Greenland, has passed laws that allow American companies to enter the mining and various other parts of the Greenland economy. So there are no barriers at the moment for enhanced American security or business presence within Greenland. So, since we have not heard any more detailed explanation for this desire, it's very difficult to understand concretely what it is about, if it is not just simply location. A real estate guy wanting to add yet another location to his global Manhattan type like skyscraper.
We're also keeping track of oil prices as global uncertainties continue to rise after both benchmarks fell about 1.5% overnight, remember. Now, this is concerns as the U.S. intervention in Iran fade. President Trump telling the press that violence in Iran is scaling back. Remember, more than 2,500 people, according to reports, have been killed there.
We have been informed by very important sources on the other side, and they've said the killing has stopped and the executions won't take place. There was supposed to be a lot of executions today, and that the executions won't take place. And we're going to find out. I mean, I'll find out after this. You'll find out. But we've been told on good authority, and I hope it's true. Who knows, right? Who knows?
We've
Crazy
seen the body
world.
bags, so how do you trust
No,
them?
you've seen that over the last few days, and they said people were shooting at them with guns, and they were shooting back, and it's one of those things. But they told me that there'll be no executions, and so I hope that's true.
Does this mean military action is now off the table against Iran?
We're going to watch and see what the process is, but we were given a very good statement by people that are aware of what's going on.
Now, the markets believe this reduces the risk of supply disruption from Iran, which is one of the world's largest or biggest oil producers. But some caution still remains. The U.S. has withdrawn personnel from some military bases in the Middle East, and Iran has temporarily closed its airspace, reportedly only allowing international flights to go through. Now, take a look at the skies above Iran. From just a short time ago, there was nearly zero air traffic, but we are seeing some flights going in now. Meantime, Air India says some of its flights might see delays due to the closure of Iran's airspace, and the flights which they can't reroute might be cancelled. Indigo also saying that some of its international flights would be affected. In the meantime, the Trump administration says it will stop processing immigration visas for citizens coming from some of America's favorite travel destinations, from Thailand to the Bahamas. Travel and transport reporter Monica Petrelli joins us with more on this. Monica?
Good morning, Amatos. Yeah, we have seen travel and immigration restrictions from the Trump administration before, but not one of this magnitude, covering nearly 40% of the world's countries. But earlier today, the U.S. State Department posting on X that it will no longer, starting next Wednesday, that is, give immigrant visas to 75 countries, alleging that migrants from these countries have relied on U.S. public assistance at unacceptable levels. Now, if we see the list, which the U.S. State Department posted later this morning, it includes both U.S. adversaries and allies alike in Asia, places like Thailand, Bhutan, Cambodia, Mongolia, even the small island of Fiji, alongside Afghanistan, Iraq, Iran, and Russia. In Europe, not too many countries, mainly focusing in the southeast there, places like Montenegro up to Belarus. Over in Central and South America, many Caribbean islands from the Bahamas and Jamaica to St. Lucia, over to major economies like Brazil and Colombia, notably Venezuela, though not there. And about a third of the countries on the list are in Africa, from Egypt and Morocco in the north down to Somalia and Tanzania. Now, this list and the freezing of new visa policies will last indefinitely while the U.S. says it's carrying out a full review of policies to ensure that immigrants do not rely on public assistance. Now, once again, though, Amatosh, I just want to focus in that this does not affect travel visas. This is immigrant visas only. Back to you.
Okay, thanks so much for that, Monica. I'm sure those traveling from within India and outside India will be watching these very closely, the developments that are coming in. Now, coming up, earnings out from IT major Infosys. We'll dig deeper into that and also talk about how AI is affecting jobs in the Indian sector. Stay with us. Welcome back. Indian markets are closed today, but a quick check on the rupee. We will bring that up. The rupee is where the focus is because there have been interventions from, of course, the Reserve Bank of India defending the rupee from that mark of about 90.30 is where the new support price is what we understand according to traders, and traders also reporting that there was likely intervention from the Reserve Bank of India. This is happening despite the fact that the dollar has, in fact, also been weakening. But why is the market closed? Because there's a messy election in Maharashtra, the state within which Mumbai, the financial capital of India, falls. It's the municipal corporation elections being held across the state. Mumbai, remember, Mumbai civic body is the richest in India, and the Indian Stock Exchange will remain shut. But there's a catch. Commodity trading will be shut between 9 a.m. and 5 p.m., but will open for a little later. Gold and silver will be trading. That'll be between 5 to about 11:55 p.m. right after polling closes. The Nifty, remember, fell about 0.26% yesterday, marking 7 days of losses in 8 sessions. The rupee weakening about 0.12% to the USD, despite that likely intervention. So we're watching that space as it develops. On Friday, we'll know more. India's wholesale inflation inched back up in December, also rising up just about 0.83% year on year after a negative 0.32% in November, beating market expectations. Government data shows the pickup was driven mainly by higher manufacturing costs, including machinery, food products, and textiles. Food prices were flat overall, while vegetable prices fell at a slower pace than in November. Manufactured goods inflation accelerated even as fuel and power prices remained in deflation. The data points to easing price pressures at the wholesale level, but with early signs of cost pressures building in manufacturing. We will also get unemployment figures for the month of December later today. A Reuters poll is expecting it to pick up at about 4.8% versus the previous rate of 4.7%. And this has also been the focus of IT sector earnings, Infosys earnings. What's the latest with that? Let's just bring you up to speed. Infosys did meet street expectations, and we saw the stock also rise in the US, jumping almost 11%, well, 10.5%. What was expected by the street? It was this is historically a soft quarter because of the holidays, etc. And Infosys reported 1.7% Q3 revenue growth compared to what was expected, 1.5%. But the key is, the key aspect is what we're watching with in terms of what they're reporting regarding AI. And what we can tell our viewers is that while Accenture first started reporting AI revenue growth, it stopped later because it said that AI is just ubiquitous. It's everywhere. It's all pervasive. But HCL and TCS, the other peers of Infosys, they have started giving visibility when it comes to AI revenue growth. When this question was asked to Infosys, why is it that they're not doing that? Why they're not giving numbers around it? They said they will in a way, but this is exactly what they said.
With our largest 200 clients, with over 90% of them, we are doing AI work. What we are doing in AI is unique AI services with clients, and also we've reshaped all of our existing services leveraging AI. And for example, we are using agents in several of our service lines to help enhance either growth or productivity.
All right. Well, let's talk about that and more with Ravi Menon. He's an analyst of IT services at Macquarie Capital. Ravi, thanks so much for coming back. You've been with us for many, many years. Thanks so much for this. We want to just start by understanding this particular comment as you give us your overall understanding of the earnings that have come in so far from the IT sector. Who's your winner? Who's your loser? HCL, everyone seems to suggest is the winner. But your take on that, given the context around AI, that there are some that are giving numbers more visibility and some who are refraining from doing so, some who started and some who stopped.
I think there are no clear winners in AI yet. I think all the firms are investing. I think all the large firms are, I would say, equally competitive in AI. I'd say that when it does come to large-scale legacy modernization, that's where I think the really big contracts can come out, maybe not this year, but perhaps next year. And there, I think people who have a strong infrastructure heritage as well can benefit because a lot of the modernization will also mean modernization of the legacy infrastructure as well. And that's why we prefer HCL and TCS, where they have a strong track record of data center modernization. Pure AI projects, I think everybody is more or less equal. I would say that consulting firms usually have an edge early on because they have a connect with the business, and the business is generally sponsoring some of these programs when you start off. But when it gets to large-scale adoption, that's when I think the IT outsourcing firms, system integrators, they actually come in as well. So that's why I think early on you saw Accenture maybe lead a bit, and now I think the Indian firms are starting to also get a good market share because a lot of this is about enabling the IT landscape to for the clients can actually implement AI.
The question has been that AI is going to transform the industry, and it's going through this, restructuring almost, and not just with jobs, but everything really, because of AI. How is that process going after you've been listening to the calls? I think I heard you on one of the calls. I can't remember whether it was HCL or TCS right now, where you effectively were talking about, or you were asking a question regarding this AI revenue and also around jobs, and you were not getting the kind of answer that you were looking for. They didn't kind of give you all the details. Am I right about that?
Yeah, no, I think that this is a bit like the signaling that we saw in digital. I think the firms are just trying to say that hey, we are competitive here. I think the whole point of sharing the metric is that to say that don't write us off. We are not going to be losers in this technology wave. That's the primary reason. And I think that they're also trying to signal that there is a part of the portfolio that's growing really fast, so that what you see as our current growth rates are also not going to be permanent. We have, and that part of the portfolio will grow much quicker, and it'll also become a larger part of the portfolio as well. So that it's a period of transition is, I think, what they're trying to signal. And about how the jobs are changing, I think this is actually AI in its current form. I think in coding, it's useful to the hobbyist programmer, somebody like me and you. And at the other extreme, to I would say the 0.01 percentile programmer, right? Someone like an Andre Karpathy, the former head of autonomous driving at Tesla, right? And he can be probably 100x more productive. So that's the sort of, I'd say, extremes. In most enterprise use cases, in enterprise IT, you are not writing code from scratch. You're actually trying to either modify a system to add some new functionality, or you're trying to fix something that's broken. In which case, understanding the current code base is more important. And a lot of the time, it's actually a possibility you're just on standby waiting for something to break, or you're waiting for something to be given to you. So I don't think that it's that productivity improvement will have as much of a disruptive impact as people think on Indian IT services, because system integrators won't really see as much benefit. This is in some specific instances where you're doing a brand new application or an entire legacy rewrite, which I think people were hesitant to undertake until AI. With AI, I think that starts becoming feasible because the risk goes down, the cost goes down. So I don't see this as really disrupting things. In fact, opening up new opportunities is how I see it.
Okay, that's interesting. Can you paint us a picture of the fact that we have the budget coming? There have been a number of reforms, but we're still expecting a reform around jobs. And one of the big question marks around what's happening with India's IT sector is jobs. There are people at the mid-level being laid off. They call it restructuring, they call it other things. But at the end of the day, if they are hiring 5x with some companies, freshers, compared to the people that they're laying off in the midsection because they're just not skilled for AI and they need new talent that perhaps could be molded into being skilled for AI. What's that looking like when you talk about the budget and unemployment numbers that we expect later today? What is your outlook on that?
So the Indian budget generally doesn't impact the sector as much, because this is a sector where the government's actually been historically very hands-off. So the new labor code, it's actually one of the few instances where there has been an actual impact. The taxation policy that changed many years ago, that was actually the one where the Indian IT sector had a tax holiday for a long time until people saw that it was large enough and self-sufficient, you would say, and globally competitive, that it really didn't need that tax holiday anymore. So I don't think anything will come through from the budget. And coming to the hiring itself, you're right. I think that during COVID, there was a lot of hiring, and some of it, I would say, was rather indiscriminate. And TCS seems to especially suggest that they're not really happy with the quality of talent that they hired during that time, and many of them have been given opportunities to find themselves projects within the firm, but have not been successful. And they've not been ready to reskill either. So they have really no choice but to let them go, is the way the company portrayed it. And you look at HCL Tech, they're actually hiring more fresh graduates this year compared to last year. And TCS is still maintaining the same hiring as last year. Infosys, I think, has also slightly stepped up the fresh graduate hiring. So overall, that narrative that AI is actually going to take away jobs, I think that's not playing out. It's just a shift in, I think, the sort of skills that you need to have, and you need to adapt to it.
Okay, but at the end of the day, if mid-level people are losing jobs, where do they go? Isn't that a stress on the economy? Isn't that something that the government should perhaps think of when you talk about reforms, when unemployment has been a big conversation, almost like an elephant in the room? And these people, they're not equipped for that AI transition. And at mid-level, do you go back and learn about it? What do you do?
No, that's very true. I mean, it's really difficult. I think that some of this is people who turn into, I'd say, just people managers, and they're not technologists anymore. So you are not really ready to learn any new technical skill. I think some of the affected could be people like that, and they can move on to, I think generally administrative tasks are what really gets lost in each wave of automation, right? I mean, secretarial jobs, for example, I mean, you've seen that reduce quite a lot of time. It's difficult. I mean, for the individuals involved, it's a really difficult time, and I think they will have to think about, how can they reskill. I myself was actually someone who was in the industry, right? I was I was helping run software testing services for CSE from 2007 to 11. My entire team has reinvented themselves. I mean, including myself. I mean, you see me now back as a financial analyst. I was a financial analyst before I went into the company, and now I'm back as a financial analyst.
No, that's fantastic. Thanks for sharing that personal story. I want to understand your take on GCCs and how it intersects with everything that's happening with the IT sector. What's your outlook for it? It's been in the headlines for being very positive for India.
I would say that, yes, I think during COVID, a lot of GCCs started getting set up, and India became accepted as a place with good talent, and people actually started paying salaries. They're not trying to compete with the service providers. They're paying significantly higher salaries than service providers. I mean, many roles, 30% to 50% of US salaries, and at some select roles and senior roles, even 100% of US pay. So this has actually made the sector, I'd say, again, very attractive, even though entry-level salaries have not increased significantly. Some firms do pay a bit more compared to what they used to, but it's still not a very attractive entry-level salary. But the GCCs are offering salaries that actually make the sector still very attractive for fresh graduates to come in. And I would say that GCCs, generally what we've seen is that they still outsource a lot of their IT to service providers. So somewhere between 30 to 55% is what we found in a channel check strip that we did in December.
I think it was Infosys that said that there's a 40 basis points positive effect from rupee depreciation. We've got 15 seconds. What's your take on that?
I think that the rupee depreciation benefit generally will be shared between the companies, the clients, and also wage hikes to the employees. That's how I think it always is.
Okay. Ravi Menon from Macquarie Capital, thanks so much for your perspective and your outlook. I'm sure we'll bring you back the next time in Q4. All right. Coming up, silver continues its sparkle into 2026, but is the rally over? We'll discuss what's driving the demand for the precious metal after this short break. Welcome back. You're watching Inside India. Some of the stories that we're keeping tabs on right now. Well, let's start with the first. President Trump spoke with Venezuela's interim president, Delcy Rodriguez, on Wednesday. The call marks a shift between both countries after months of escalating tensions, which boiled over after the U.S. captured Nicolas Maduro and his wife to stand trial in the U.S. for drug charges. President Rodriguez has slammed the Trump administration after Maduro's capture. However, she has described the call with President Trump as long and productive, where both sides discussed a bilateral agenda. Also, Canadian Prime Minister Mark Carney has arrived in Beijing for a 4-day visit to reset bilateral ties. This trip marks the first one by a Canadian PM in 8 years. Deals could include progress on Chinese tariffs, on canola exports, and more Canadian crude oil exports to China. PM Carney is expected to meet with President Xi Jinping during his visit. The trip is supposed to be a soft reset for ties between the two countries, where relationships have cooled in recent years due to trade tensions. And Indian markets closed today due to civic polls in Mumbai, the city that houses both the stock exchanges. The municipal corporation elections are happening all across Maharashtra, but the focus is on Mumbai due to the civic body's massive budget and political influence. Around 1,700 candidates are in the fray in Mumbai, and results will start coming in later tomorrow. A quick check also on the rupee. We're tracking what's happening with it because there have been reports by traders that, well, the Reserve Bank of India, as it has done historically, is intervening, is trying to support the rupee against the dollar. Now, the dollar weakening, and yet you're having the situation where FIIs are selling, and therefore the rupee is weakening. Additionally, of course, geopolitical uncertainty playing out, tariff uncertainty continuing, just not moving away. And that's why you're seeing that this support level that is being seen between 90.25 and 90.30 is where the rupee is right now. Now, we're keeping a track of oil prices also. Remember, they did drop, well, at this point in time, WTI at 59.95 and ICE Brent at 64.37. But we're keeping in mind the fact that when the U.S. President Donald Trump effectively says that he's now backtracking a little bit on his earlier talk about intervening potentially in Iran, that's what's impacted the prices. We're watching this space also because there's a lot happening with safe haven assets. We're talking about gold and silver. Take a look because both hit records, and we really want to zoom in to silver now because yesterday, you know, record run 15 days into the year, and the precious metal is already up over 22%, but it is seeing sharp pullback now from its record high of $93 an ounce that it hit overnight. This is what we were talking about. So what's really driving this price action? That's why we're bringing in Naveen Mathur. He's the Director, Commodities and Currencies at Anand Rathi. Naveen, thanks so much. And yeah, your tie is lovely, by the way, quite similar to mine. I appreciate that. I want to start by understanding a couple of things. For silver, and this is perhaps going to be difficult for you, so try to, let me see if this makes sense. How do you quantify the difference between geopolitical uncertainty, rising industrial requirements, safe haven perception due to an AI bubble, or the debasement trade? Out of these four things,
good morning.
What's going on?
Good morning. Good morning to all the viewers. Thank you, Amit Jyot and the CNBC Asia for hosting us on this show. Thank you very much for the appreciation of the tie. I know I can't change it on the live show. So Amitoj, the very relevant question in the mind of everybody, right, from the investors to the institutional customers, the central banks, and everybody, where the silver would be. The fundamental factors remain pretty strong. There is a supply deficit over the last 5 years, and we are seeing that supply deficit resulting into a kind of a pushback for the prices on the upside. The central bank buying also has been pretty strong. Silver, Amitoj, is an industrial commodity. It is used, around 60% of its consumption goes to the various industrial uses. And the industrial uses include the solar power, electricity, the EV, the electric vehicle, and the batteries related to that. So silver remains pretty volatile because of the fundamental factors. It has been a lag on the silver with respect to the gold and silver ratio also, which has been on the average around 67 to 70. It has gone up because of the silver. I would say because of the gold prices, and it touched a high of around 110 the last year. we have seen the gold prices touching around 4,600 levels in dollar terms yesterday, and silver also therefore has got an upside move to around $93, as you rightly pointed out. The January itself, the silver has given returns in dollar terms, Amijo, to around 30%. And in rupee terms, because of the rupee kind of a depreciation over the last year, it has given a return in rupee terms at around 170%. And in January has been around 22% or so. So I think there has been a short covering today, as we can see, around 6% down on silver. We are trading at around $87 a troy ounce. So I think the opening in India also would be on the downside. But the fundamental factors, Amitoj, remains pretty strong. The ETF buying in India has been strong. We did saw the AUM last year when we closed December 2024 on the silver ETFs were around 10,000 crores. And today we are sitting at around 67,000 crores. So that is another demand which has come in from the investors because of the silver ETFs in India, which were launched in 2022.
All right. So why put that money in a silver ETF? And I ask this because I'm trying to understand how much of the silver price record run is because of India in the last couple of days, perhaps week, given the fact that India accounts for roughly only about 8% of global silver demand. So can you account for that? Give us a sense of what's going on in India. Why are they buying?
It's a FOMO. We are hearing kind of a story on the FOMO. People realized, the silver ETFs didn't pick up well. The gold ETFs definitely had been in demand for all the years. We have seen the gold demand coming up. I'm letting you know why the silver ETFs have been a kind of in doldrums since the launch, Amitoj. The gold ETFs particularly has been in demand. We have seen the uprise on the AUM when the financial crisis happened in 2008, 2009. We also saw the uptick during the Euro crisis. And then the COVID definitely had the pretty strong demand on gold as a safe haven. So all these geopolitics, pandemics, etc., or the economic uncertainty had a positive effect in the investment demand, being the safe haven asset people understood. Now, silver largely was not seen as a safe haven asset, but during the course of the last year, till I would say September, October, there was not too much of a demand. I would remember that the May 2025, the AUM just stood at around 14,000 crores for the silver ETF. And as of August, we had a number around 30,000 crores or so. It was only post-September with the tariff issues when became relevant. The economies were thinking about the kind of the geopolitics which was happening between Russia and Ukraine, the steps to be taken by the US administration out of the peace deal, the tariff uncertainties. All those things led to the silver being seen as an asset class on the safe haven and at the same time, Amitoj, as an industrial asset or the industrial commodity too. So I would say that the realization actually came in with the people thinking about, oh, did I miss the rally? So that kind of a FOMO started building up sometime, I would say, in September or October last year. And from there was a sudden spike. Your graph also shows the similar kind of trend. So I would say it was more to do with the FOMO. It was more to do with the rally, which was continuous on the upside, and the gold-silver ratio also lagging with respect to the silver prices against the gold. So I would say it was just that I should not miss down on the rally. And there were fundamental reasons too. People started understanding the reasons behind the rally. And then they realized, oh, if this is what it is, then I should be part of it. So therefore, from 10,000 last year to around 70,000 crores as of this particular time when we stand for the silver ETFs.
All right. You see silver going to 100 in 2026. Is that correct? And I want to understand that a little bit because, Citi upgraded its 3-month forecast for silver also to 100 an ounce. So I want to ask you, not your 2026 outlook, your next 3 months outlook on silver. Will it hit 100 in the next 3 months?
93, Amijot, 93 we are sitting on. Means we closed the year, I would say, at around the 83, 84 levels. We are at 93, $10 spike in just 15 days. And that is 30% on the upside. So means I would like to play a little cautionary note here, Amijot. There has been a very, very strong bull run, and I would say exceptional bull run since 1979 for both in gold and silver. So I would say, Amitoj, that people should be cautious. There can be profit booking. The fundamentals still remain strong, but we might not see the kind of the rally, although we are up 30%. But we might not see the kind of the rally over 2026 calendar year. 30% on the upside in just 15 days, booking on the profits can come anytime because of those levels which we are seeing in the market. So investors need to be cautious. $100 can be a possibility within next 3 months. But I would say one should not go in as an investor to get into the market in one go. You should stagger your investments on silver ETF, which are now available in India, apart from the gold ETFs. So I would say you should stagger your investments to benefit from the uptick because of the fundamentals. But $100 looks pretty much a possibility. We are anywhere at around $90 or $93 as far as the yesterday closing is concerned.
Okay, so you're suggesting a SIP model, which Indians anyway love. Okay, let me ask you this. Why should Indians not buy or, physical silver when you have capital gains on your ETFs, etc.?
You should weigh the cost and analysis rather than looking forward for the taxation benefit. Silver is a heavy commodity. It's a dynamic commodity, Amijot. So I would say, means holding even 1 kg of silver is an issue for any investor. Where do you go to have 1 kg of silver to be stored in? So logistically, it doesn't make any sense. And when you have the financial products available, and don't mind me saying the taxation is part of the story. When you see 150% kind of an uptake in a year, 30% in just 15 days or so. So I would say that the logistics with respect to holding silver definitely is a very, very strong barrier for people when you have the financial products to ride on the underlying fundamentals when you can have those assets on your system. So means the easier mode of investing in gold or silver for any investor, be it an institutional customer, be it a very super HNI or a retail, is just on the tick of the button. Means you just press the buttons and you buy ETFs. So I do it every single month as an SIP for both silver and gold. So for me, it is just a matter of seconds, and I am there part of that particular asset. So I would say it's more to do with the logistics of keeping the silver rather than the taxation or the other benefits you have on the other products related to silver.
Let me ask you this about AI. India is transitioning and perhaps behind on AI and considered the hedge to the AI trade in the US. So there's a conversation on an AI bubble. I want to ask you also if the gold and silver is a bubble. You don't seem to say that, but silver is set apart from gold because of industrial demand. That's very clear. That's what everyone's been talking about. So in that context, I want to understand how much of that is, how much of India is responsible for that, because India is still, picking up its paces when it comes to AI and semiconductors. That demand in India isn't that much. We're still in early stage. India isn't making that many chips that silver would be used for. So what's your take on that?
Amijot, let me say and correct you on this that I do feel that we are somewhere in the range of a bubble. Means it's not a bubble on the price. It's just I would say the kind of the movement both gold and silver have taken. The gold has fundamental reasons, but $4,600, $4,700 is a little far-fetched the way the things have moved over the past couple of months. And mind you, the rally actually started post-September. And it's been 4-5 months only we have seen where the major upside has happened for both gold and silver. Now, coming back to your question on the AI, yes, it's a trend. It's a talk of the town. Means I would say the artificial intelligence is kind of the kid on the city or the kid in the town. It is something which would be disruptive for the economy in terms of the use of the AI. But at the same time, it has its own positives too. Means it would increase productivity to a large extent, and definitely India entering into this Viksit Bharat kind, I would say Viksit Bharat 2047 node, there would certainly be the demand for silver on the solar, on the EV, and the AI too. So I would recommend that, I would say that these would be the upcoming sectors where the silver demand actually from India would go. But India not being the largest, so to say, as of now, the importer of silver, we consume around 7,000, 8,000 tons of silver. And in 2025 calendar year, it is estimated at around 6,000, 6,500 tons. So I would say that that in due course of time, just not the next year, maybe the next 3-4 years would be critical for silver imports in India. And because of those fundamental reasons, be it the physical silver, the mining, the central bank aggressive buying, the ETF demand globally, there would be a crunch. And with that particular crunch and the demand coming in, you might have the positive effect on the silver prices in India too. Right. But for India, it would not be 2026 story. It would be a little prolonged story till 2030, where the AI, the solar, and the EV demand would start coming in as industrial. We see solar demand. There's no second thought about it. Okay. But the EV would be something in 2027, 2028, when it would pick up to an extent where India would play a very critical role as China for the base metal or the industrial metal, including silver.
Just quickly about the rupee. It's been choppy. How much of that is weighing into the gold and silver trade?
Very much. 145 in terms of gold, 145 in terms of the dollar returns on silver, and 170-71% on silver in rupee terms. And the case with 15 days of January, 30% returns on dollar prices for silver, and around 22% because the rupee did appreciate in early January. So 22% kind of returns on Indian markets. I would say that that rupee would be stabilizing at around $90. We have seen aggressive intervention by the RBI in the last month when rupee did touch 91. So our understanding to rupee versus dollar is that we would be in a range of around 87 to 90, 91 on the higher side, Amijot, for becoming export competitive. And that's what looking forward India would be, to have the dollar inflow into the RBI chest to manage on the rupee depreciation. So I think the government is very positive with respect to exports. The last quarter numbers also showcased our resilience on the export services, exports particularly. May not continue, I would say, because of the various uncertainties with respect to tariff, the H-1B visas, etc., although the clarity has come in from the US administration. But all said and done, I would say that 87 on the appreciative side against the dollar and 91 would be something where the rupee should stabilize over the course of year, which is 2026 calendar year.
Thank you so much. Appreciate that, Naveen. Naveen Mathur of Anand Rathi giving us a perspective on the gold prices and the silver prices. Thanks so much for that. I'm sure we'll bring you back very soon.
Very much.
Now, as we just spoke about semiconductors, they are a huge demand driver for silver, but President Trump has imposed a 25% tariff on certain AI chips, including those that could be sold to China. Elaine Yu has the latest details in this developing story. Elaine, what's going on?
Hey, Amitosh. So this week, the U.S. has approved sales of NVIDIA's H200 to China. But now Trump has imposed a 25% tariff on these very chips, as well as some other advanced GPUs. But this tariff can be exempted if the chips support the build out of the U.S. tech supply chain. So this is clearly taking aim at NVIDIA's H200, which is manufactured by TSMC using its 4 nanometer process. So what this means is NVIDIA will have to pay this 25% tariff on the H200 produced in Taiwan before selling them to China. Now, the White House says the reasons for this tariff is because the U.S.'s chip-making capacity is insufficient to meet domestic demand. So it's come to rely on these foreign sources. So they said this is meant to incentivize domestic production. Now, NVIDIA has responded saying that it applauds this decision to make the U.S. chip industry competitive while offering these H200 to approved commercial customers, namely those in China, strikes a thoughtful balance that's great for America. Now, China is also striking a balance here between boosting its own domestic chip industry, of course, and the huge demand it has for these top hardware that's really important for developing China's own AI models. And a Nikkei report today says that Beijing is working on draft rules to regulate how many AI chips local companies can buy. So it's not a blanket ban, but controlling the volume of these H200 chips flowing into China. And the information has also recently reported that the Chinese government said tech companies can buy these chips only under circumstances that are special, such as for R&D purposes with universities. But adding to the confusion on the ground, Reuters also reported that customs authorities in China has told agents that these chips aren't permitted into China. But recently, there's been a lot of talk about, is the AI gap between China and the U.S. widening or narrowing? And we've heard executives from Chinese companies themselves warning about a disparity in hardware and how that limits China's progress. So this hardware chip question indeed is key for China. Amitosh?
Thanks so much for that. All right, more news and updates on the other side, including key Q3 earnings report cards from India. Now, India's central bank has given in-principle approval to Japan's Sumitomo Mitsui Banking Corp to set up a wholly owned subsidiary in the country. SMBC, which last year bought a 24% stake in Yes Bank, has so far operated in India through a branch. A local subsidiary will give the bank greater operational flexibility, including the ability to open branches freely and receive treatment similar to domestic lenders. SMBC is part of the broader Sumitomo Mitsui financial group. Those Tokyo-listed shares right now up about close to a 1%. Now, Grow's a parent company, billionaires Garage Ventures, yes, that's the name, we always mention that, reporting a rise in adjusted profits for the third quarter due to a one-off gain. Billion Brains also announcing that U.S. financial services company State Street would be investing $64 million in its asset management arm. Grow is also a relative newcomer to the market. Debuting just last year, the company has seen its active users rise to 16 million, up 8% from the previous quarter. Now, that's all the time we have today on Inside India. Keep watching CNBC because Access Middle East is up next.